Hi there, it's Callum Newman here from Fat Tail Investment Research. Now, your normal video host, James Woody Woodburn, is under the pump at the moment, so I've stepped in with Murray Dawes, which is, what would you say, like a good thing today because we're actually going to be running with Fat Tail Daily from here on in. Murray's a technical
Yep.
analyst, and he'll be giving a chart of the day, and I'll give you my top three things that I think are important on the day coming from the markets. Now, in today's article, we're touching on gold, and I was actually teeing off something Murray told me last week, which I thought was a really interesting point and really very important for where we are in the gold bull market right now. So, to set the scene, that gold has had a big run over the last 12 months, a very big run, and so some of those ASX producers have also done really well, and the smaller ones are starting to rumble. But you made the important point that don't get led into the thinking that somehow you've missed the boat on this gold rally because it could go for a very long time.
Yeah, I find that everyone, when they make predictions about markets, they always anchor whatever their prediction is to what the current price is. But when you look at history, markets do crazy, outlandish things, and it's only once it becomes history that everyone goes, "Oh, of course, that's fine," because gold was at $250 in 2001. 10 years later, it's at 1950. Now, how many analysts were out there when it was at $250 saying, "Oh, gold's going to go from 250 to $1950 in a straight line over the next 10 years"? Like, not one. And all the way along that way, there would have been analysts saying, "Oh, it's at $500 now. Oh, it's overbought. Nah, that'll be it now. Gold's gone nowhere for 2 decades, so that it can't go much further than that." And then it just kept going up and up for another 7, 8 years. So what markets actually do versus what we think markets can do can be totally different. So I think all I did show in my chart of the day was to say, take that rally from 2001 to 2011, and we had a massive correction from 2011 to 2015. I said, well, if we did have the same rally happen, what would happen? And basically it came out saying that gold could get to 8,000 in 2030 if it just followed the same path from a rally has actually happened in the past. So it just makes you realize that markets can do things way outside of your expectations, and sometimes you've got to stop yourself from this idea of, "Oh, it's overbought now," or "I've missed it now and it can't go any higher," because it can.
Well, that's the hard part of holding on during a bull market, though, right? Because, okay, gold's had a big rally in the last 12 months, but there is at some point presumably going to be some sort of correction or move down or some temporary weakness where it just doesn't do that much. And then, the people you're alluding to will go, you see, we told
Yeah,
you it was going
that's
to
it.
run out of
Yeah,
puff.
and everyone gets shaken out along the way, and yeah, that's it. That's why I sort of follow trends really, and try to stop my brain from thinking that it can work things out, and let the market tell you when things are going to change. And I was actually interested in reading your article because I haven't been looking at the mining services side of the business at all. And I had a look at the one you were talking about, Index. I haven't even looked at that chart for ages, and it's absolutely flying, which is more mining services, isn't it? What's sort of their background of what those guys do, and
Yeah, well,
how you got
their
in it?
main commodities are copper and gold, so their gold is very important to them. But the reason I brought it up today actually was that even though gold has done really well in terms of price over the last 12 months, the actual spending on exploration across the whole mining complex is down. And so when Imdex came out with their results last week, I did see a fund manager actually. He was a little bit worried about what they were going to put up because this fund manager quite rightly pointed out that the exploration spending was down, so it didn't actually bode well for their numbers. And in one sense, he was right, but in another sense, the most important, he was wrong because Imdex did post results that were down. Their revenue was down anyway, but the stock went up, which is unusual. It doesn't, so if you get you know, a market with high expectations like gold and this type of thing, you'd expect it to go down. And what I'm viewing that as is that the market is immediately ignoring these results and looking ahead because it can see the high flying gold price and just the amount of
Yeah, I
money
mean,
going through.
copper's absolutely flying. It's ramped about 14, 15% in the last couple of weeks.
Well, yeah, that too. But just to my mind, the market's already looking ahead to 26 and 27, anticipating the spending that's going to go towards index in the future, even if it's not happening now. So I was taking it as a clue, if you like, that this bull market is nowhere near over. And you've been through a few gold bull markets. Like it's still not a speculative market. It's driven
And the
purely on the
trends,
cash flows.
and when the trends happen, that I mean, they go. Gold is one of those ones that can either be completely dead for decades, or when it does trend, it really trends because it's often related to monetary issues, and you know, you want once you get out of
They're not
balance,
resolved quickly. Yeah.
yeah, and you've got central banks all trying to buy it up, and you know, all of a sudden, once it flips and everyone realizes, yes, you know, it probably makes sense to be owning gold, and let's say allocation to gold goes from 5% of someone's portfolio to 8, you know, across the board. You know, that could just be massive demand uplift all of a sudden. So,
Even the projections. I mean, if you go back to Bitcoin, a few years ago, people go, "Oh, if only every investor in the world only puts 1% of their
yeah,
money in gold, that equals so many trillions of dollars." Bitcoin in that case. But yeah, if we start doing the same thing and go, "Oh well, okay, the whole world wants to own gold, and there's X amount of dollars in the world, and you get these projections of price gains in gold, which then feeds the bull market of the gold stocks and that type of thing." So there's heaps of interesting angles that we can go with this. The other point I was going to make is to say that even the action we've seen here in Australia, I mean, we're a small market. Like for Americans, the gold bull market has only really just started um,
coming on
coming
the
to their
radar.
attention, if you like. I mean, they've
Yeah,
had this roaring bull market in tech stocks for so long now that most American investors wouldn't even particularly care about gold, I reckon. So if we
yeah.
get those guys coming in, that's bigger again.
Well, again, if they, yeah, as I've heard you guys talking about recently, you know, Australian currency really weak, US investors looking and saying, well, we could pick up those assets pretty cheaply, really, for us in US dollars. So maybe there's offshore money can start coming our way for the M&A mergers and acquisitions, you know, in the gold space as well. But anyway, yep, we both know it, and I'm looking at silver as well as maybe, you know, if that gets above $35, I reckon that could take off. There's a bit of dislocation in that market as well. So it's going to be interesting over the next 6 months, I reckon, in that space.
Absolutely. All right. Well, we'll leave it there for today. But as I say, lots to be excited about. Gold, we covered a lot of that last week too across all these videos and in the Fat Tail Daily. So stay tuned for more commentary on gold and what's coming up. And of course, going forward, we're going to have chart of the day from Murray Dawes. So that's something to look forward to. So we will see you again soon.
All right.
Thanks, Murray, for your time.
Cheers, mate.